Okay. Hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another binary options video, yes, binary option strategy video, IQ option strategy video, where those one which I do always on weekend when I'm talking about those kind of trades which I have already done, where I'm gonna discuss those kind of trades further, yes, and much more deeper than it is possible in a live trading session, yes, when I'm doing these trades, and so I'm doing on the weekend when the market is closed, yes, those kind of recaps of those kind of trades which I have already done, because I'm a European trader and European traders do not have the OTC market available on IQ options. So okay, you see here a nice upcoming downtrend. We were here before in a ranging market, yes. Now there is upcoming a downtrend, and the next candle on Monday, yes, the next candle on Monday will be here most probably a bullish one, yes, a weak bullish one, which yes, a weak bullish one, and then as a retracement, and after this most probably a continuation of this downtrend, yes. That is what you should understand from this kind of candlestick patterns here, yes, which are telling you we got here a squeeze and we got a breakout, yes, and that combination here is one of those where I have explained the no rejection trading setup. So you wait till price goes back to this level here, yes, and if you see a rejection on this level, you enter into a call, yes, because you can expect that this candle here will be a bullish one around maybe this round number here, yes. What round number is it? Yes, the 1.19550, yes, close to the 1.144, yes. You see how this step here is so small. So we are talking here about 0.00005, yes, something like this. So you can see how decimal it is, and that is the sign that there will be most probably here a bullish candle on Monday morning, the first candle, which will happen when the market will open, sorry. So, okay, let's start immediately with the video, yes. And before this, I have to recommend to any of you this kind of ebook. Get this ebook, you find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook, you find the link in the description, and in the description you will find also the link to the Facebook group. So let me first show you also those kind of concepts which are important to understand. Apart from the candlestick patterns and the chart patterns, yes, you should understand the candlestick math stuff, yes, because I'm using this almost often. The part about the four keys, yes, the trend, the key level, the candlestick pattern, and the rejection. Market condition, if you don't know if you cannot distinguish the market condition, you will mostly enter in the wrong trading setups, yes. You have to understand the market conditions. So then obviously if you are using the EMA, understanding what the major trend and the minor trend is, that the EMAs are lagging, yes, that they are telling you only what happens in the past. Mostly it's so that if you see some steep 100 EMA, it's almost, the uptrend is almost over, yes, almost over in the minor trend, yes. The major trend is still maybe up, yes, but it can be also finishing, yes. It's only giving you, this is a lagging indicator. That means it's giving you a hint about that what happened in the past, but it can't be changed already, yes, because it calculates with the last candlestick. So then again, the rejection part, yes, where because I got almost emails about rejection, yes, that a lot of traders do not understand that the rejection is the last confirmation, yes, that you have to get together the trend, the key level, the candlestick patterns, yes, and then at last part, yes, you have the rejection. If you get wrong you blame the rejection. You have not to blame the rejection. You have to blame yourself because you have done wrong kind of analysis. You have done wrong candlestick analysis. You have done wrong key level, support and resistance, yes, and you have done wrong trend analysis, yes, because the rejection is only a small part of it, yes, and you cannot trade only based on rejection, and you cannot based only on candlestick pattern, and you cannot trade based only on key level as a support and resistance or trade. Yes, it's not possible because that are almost all of them has only a small percentage on the trading setup, on the win, on the success. Yes, so then the part about about a fake breakout. Yes, watch this video because I get almost often emails, messages, comments, yes, in the YouTube comment section about those one who are concerning about fake breakouts. They do not understand fake breakouts, yes, and that's the reason why I can only say watch this video about the fake breakouts, how they look like. Watch my live trading videos about fake breakout because that are only ideal candlesticks, yes. I cannot show you all kind of formations. There are millions for different formations of fake breakout. You have to understand the concept, and the concept is based on the distance between the support and resistance. So watch this video and understand it and apply this on your trading. Then understanding the difference between reversal and retracement. Also, this is a topic where I get almost often emails and comments about how to distinguish a reversal from a retracement. If you understand that there is no difference, yes, only the time frame is different. In a lower time frame, a reversal is a retracement in a higher time frame, and then you have to understand where we have the key level, where we have the wicks, which are showing you in what kind of direction the market is heading. Yes, if you have a lower shadow on an uptrend, then you can expect that there will be a continuation of this uptrend. If you have an upper shadow which is bigger than the lower shadow, yes, and the bearish candle, then you can expect that price will continue to going down. It's all a question of probability. So then the video about the highest probability trading setups, yes, and the high probability techniques. That is the trend continuation stuff, which I almost often use, yes. If you have some key level, you wait for a pullback, or you wait for candlestick patterns which are confirming the direction, or you wait for a reversal pattern. This kind of concept here, in combination with the four keys, yes, the trend, the key level, the candlestick pattern, and the rejection, are doing a cycle, are giving you hundreds of thousands of opportunities every day. Yes, only this kind of concept. Yes, because you see it's a cycle. And okay, wait, what's happened here? What's happened here? I don't know. Yes, okay, it's okay. So I think it's right. Yes, like I told, this are giving you so many opportunities. You have only to be patient to wait for such kind of opportunity, and then or you trade in the trend continuation, or you trade the reversal. Yes, after a confirmation of a reversal candle. Yes, but most of the traders try almost to step in here. Yes, on this candle, yes, but for this, to do this, you have to be really experienced, and you have to understand much more than only this concept. You have to understand the momentum and everything, and the running candle itself, yes, and obviously a candlestick analysis of the previous candle, yes, because because this entering here on this candle, yes, without any kind of confirmation that there is already a reversal happening, will lead you most often into OTM, yes, out of the money, because you don't know if price will reject from it above, again, from the support and resistance level, the EMA or whatever, yes, and then you get out of the money. That is what you have to understand. Most of you are taking too much risk, yes, on their trades. They are not patient enough. They enter too early because they have the fear to miss a trade. Yes, that is a big problem. So, okay, then about this, you see, I can tell you about this kind of cycle here over and over again, so many things, yes, because this is the trend continuation stuff, and that can be applied not only on binary option, this can apply to FX options, digital options, and also to Forex. Yes, this is always the same. This is the most simple part. Yes, you wait that any kind of SNR is touched, and then you trade at the SNR the reversal, and then to the next SNR here, yes, to this level, from this level to this, you trade continuations. Yes, that is the concept. And then obviously you have to use different time frames. Yes, on binary option you can use 1 minute time frame. On Forex you should use 1 hour time frame. But the concept is the same, and it's a high probability trading setup concept. Yes, which will lead you to profit. So okay, if you apply this right, yes, obviously, if you have no patience and so on, it's not good. So, okay, then obviously this kind of stuff which I have explained here, yes, the support and resistance stuff, this can be applied to any kind of support and resistance, yes. I will make it a little bit fast. How to draw support and resistance based on candlestick patterns, yes, this is this one here. You have to understand then this kind of stuff about the progression, and here you see the analysis stuff. If you're doing this analysis wrong, you will get out of the money based on the rejection, yes. If you are doing this analysis right, yes, you will get also with the wrong rejection into the right trade. That is the concept about the rejection, yes. And then obviously the last part of the 7th edition ebook, where I talked about the running candle, the prediction of the next candle, yes, and how to analyze the running candle and what to understand from the previous candle, yes, all those kind of concepts. Then the concept about the entry points, which is most important also in this kind of video again, and then how the running candle behaves, and what the predicting of the direction of the running candle is telling you, yes. So, and that was it already. Market conditions should be also a topic, and then obviously the two, if you are using the Bollinger Bands or the EMA, also those kind of videos where I have explained exactly what a consolidation area is about, where you should trade them, what is what the Bollinger Band is telling you, all those kind of stuff which you should know. So I have made again an overview of those kind of concepts which you should know also, yes, because you see all are working together, everything is working together, and so you have to have a basic knowledge of all of those kind of stuff, yes, because else it will be a little bit difficult, because if you trade only based on candlestick pattern and you have not understanding of a trend, yes, or the market condition, it's obviously, and then they're coming up those questions like why it got wrong, yes, why got this trade wrong, and this trade gone wrong because mostly you didn't understood the other keys, yes, the trend, the key level, the candlestick pattern, or the rejection, all together, you don't understand all together, yes. And then a part of this you have the market condition, which is really important, because where in relation to the market is price, yes, and if price is overbought, for example, yes, you should expect most often a reversal, but this is only in ranging market, else you will have to expect what? Right, a trend continuation, and that is the key. Okay, so let's start with the video, because else I will make too long. So I have here prepared a video, and we have here a downtrend. You see a nice downtrend. Then we get here in this kind of consolidation area. You see the Bollinger squeeze here. Let me show you this. Here we got before already. Here squeeze, yes. Consolidation area, breakout, yes. Squeeze again, breakout, yes. Here breakout, yes. And then we are getting here again a squeeze, yes. And then we got here again a consolidation area, yes. And now it looks like, and this is what I have explained, downtrend, ranging, uptrend. Yes, that is what I have shown you in the concept in the ebook, yes, and that is what I would expect now, yes, because we have here already the uptrend here is started, the Bollinger Band breakout has happened. You see also that what I have explained, if the price is between the 1 and the 2 deviation, we have a downtrend. If the price is between the 1 deviation, 2 deviation, upper Bollinger Band, we have an uptrend, yes, and that is what we are breaking here, the support and resistance level, yes, which here was not confirmed at this moment, yes, but here you see the Bollinger Band, which is going flat, which I have shown you and told you so often, that price will, that this is some kind of support and resistance level. This is falling on the same high like this Okay, this was maybe the mouse. Yes, but here you see the crossing of the 1 deviation and the 2 deviation between the 20 EMA and the middle Bollinger Band, which is giving also some kind of support level here, or resistance level. Yes, so okay, let's start, and as soon as I enter here into a trade, I will stop the video and I will explain what I have done and why. Okay, you know that is what that was the expectation which I have. Yes, we have a breakout after Bollinger Squeeze. We are between the 1 deviation, 2 deviation upper Bollinger Band. We had a prolonged downtrend before, that is this one here, yes. And now after arranging, we are getting into an uptrend. So what do we have here? We have here an uptrend, yes, and that is what is only based on that what I have understood from the past. And that's the reason why I entered here into a call. Yes, I entered into a call because I understood that price will continue going up based on this bullish candle, which showed me that the uptrend will most probably happening. This candle here didn't reject strongly from the 50 EMA, or didn't react on the 50 EMA, and that was the reason why I entered immediately into a call, because I understood that price will close above the 50 EMA. That is almost the concept, yes. Or price will close above or below a support and resistance level, yes. And if it doesn't get rejected from it, it will mostly close above this, yes. And that is why I entered here into a call. So now I'm waiting here, because I didn't know if this will be a fake breakout or not, yes, because it could be also a railway tracks fake breakout, and you see price goes down. I have the mouse over the higher button, yes, because I was sure now that price will continue to going up, and doing only because this is what I have explained about the change of polarity. After price will break through it, yes, and you are in an uptrend and you see the steepy 20 EMA, which is going steep up, yes, then you can do a call option on support. In this case, the 50 EMA is a support after this candle broke it definitively, yes, but I waited to get a better entry point, yes, and then after price gone down, yes, I understood, okay, that is yes, that is only that will be not a fake breakout, that will be a trend continuation, and that was the reason why I entered then into a call here. Yes, it was a call option on support, nothing less and nothing more. That is nothing special. So, and after this I entered again on a call, yes, because this candle here showed me that we have here still a buying pressure. We got a strong rejection from the 50 EMA. This kind of formation here of the 20 EMA, the Bollinger Band, if you see something like this, you are in a strong uptrend, yes, and you see we are here in overbought area, and that was a sign for me that price will stay in overbought area, because we are here above the 20 period 2 deviation Bollinger Band, yes, and that was the reason why I understood that price will continue to going up, yes, because we are above. This candle is showing buying pressure. I would have also waiting for a rejection, but mostly in this kind of condition, price will move really fast upwards, and so I entered immediately into a trade, because at the end price would retrace back, yes, and then we would get out of the money. So, and yes, and then I think then happens a long time nothing, because we are now in a consolidation area between the 100 and the 50 EMA, and I have explained where you should trade them. Yes, you should trade them mostly at the edges here or here, and here we are now in the no man's land, what you know also from the Fibonacci videos, which I'm telling you, if you are between the 100 and the 61.8 Fibonacci level, you are in no man's land, and here I was here also in no man's land, so I didn't trade any kind. I was waiting to understand what's happening here. Yes, so I will do a little bit fast forward to do not waste too much time. So, and as soon there will be a trade, I will stop the video. So it's a fast forward. Yes, we are doing here fast. Okay, I entered here into a trade. So, and why? Yeah, easy. Yes, because this is what I have explained over and over again. Here we have a double top. Here we have something what looks like an engulfing candle, but not really an engulfing candle, because we are opened here with a lower with a gap down, yes, but this candle here, yes, this candle, and this kind of inside bar fake breakout of this support and resistance. Let me show you this. This is the concept. So this kind of inside bar fake breakout of support and resistance. This is this level here, yes. This is the same thing what I have explained about the no rejection trading setup, yes, which I have explained in the ebook. So you go up above this, yes, and on the and after this you get this kind of condition where this kind of two candles, yes, this is the inside bar fake breakout, which I have explained in the ebook. You have seen this kind of what I have shown you at the beginning, yes, is creating, and this candle here is showing me that price will go down. This is a yes, a trend continuation, bearish trend continuation pattern. Yes, the hammer, bearish hammer. You can say also a hanging man. Yes. But I prefer to say that this is a bearish hammer because the hanging man is at the top. Yes, this is not not really at the top. It is also I would say it's already okay. We are here already going far away from the 2 deviation Bollinger Band too. Yes, that is also a confluence. Yes, and we have here there's something what looks like a pullback. We have here the 50. Here we have the 100. So we have here in between the 75 EMA, yes, and we do here a pullback of the 75, and now price will most probably to continue to going down. And I waited. You have seen 1, 2, 3 candles. I was not sure what's happening because we were here in no man's land. But after I saw this kind of condition, 1 touch, 2 touch, 3 touch, for me was clear we have selling pressure, and so price will most probably continue going down. So, and that was the reason why I entered here into a put, but not directly. I entered into a put after the price was above the closing price. Really important. There's those kind of concepts which I have explained before at the beginning about the ebook. Yes, where I have explained this. So, and you see market is doing here some kind of panic. Yes, it's not moving down. Maybe some kind of consolidation. Yes, it's moving also up. And yes, nothing happened. I will do a little bit fast forward to, okay, moving up, down, up, down, up, down. Yes. At the end, it got at the money, yes, at the money. And you see how important this again was, yes. And then there's coming again this kind of concept which I have explained before: engulfing candle or reversal, yes, retracement. And then I enter immediately into a put, expecting that price will continue to going down. That is what I have explained exactly in the 7th edition ebook. It's not looking like this, to be sure, to be honest, yes. But you see, I have used those kind of concepts here before, which I have shown you at the beginning, and I will show you them again. So let me put it to the end. So I will show you them again, because so you understand better what I mean. So first of all, this kind of inside bar fake breakout. As you see here, support and resistance, and this is formed by inside bar or outside bar. Yes, and that what we had here, that was this kind of support and resistance and a fake breakout. Yes, here you see this inside bar fake breakout. So then that kind of trades which I have done here, call option after a hammer. Or pin bar, let me see, that was this one here, where I showed you the trend continuation. We got this kind of candlestick pattern like, yes, above support and resistance, and then I entered on the next candle in a trend continuation because I understood that price will go above the 50 EMA. I have shown you this before. So, and then this kind of concept, and that is why this one makes also a big part of the application process of the mentorship program. Yes, because if you do not understand those kind of concepts, you can you will maybe not pass through it. Yes, because that is first of all this one where I have explained the entry point where you should enter. You see this one of entry point saved my trade. Without this kind of behavior, I would get out of the money. Yes, so it was at the money. Yes, it was not in the money, but at the money. But if I have not done this, yes, I would have this would be out of the money. Yes, and then this one here was no, this one here. Yes, this one where I have shown you bearish engulfing candle a weak candle, but this can be applied to any kind of candlestick pattern. It's not about only bearish engulfing candle. That can be every kind of reversal pattern, and that is why I'm showing you. And then you enter in the next trade in a trend continuation, and you see here engulfing candle or a reversal pattern here. Yes, reversal pattern, double top. Yes, and then you get a weak candle. Let me see. I have no, I have not done this with a double top. Yes, but you see, you can use this for every kind. Also, if it doesn't look like this, yes, this is a concept which you should understand. Use your brain. Yes, and then you get here this kind of weak candle, and I enter immediately. Yes, and that are those things which I have explained in the 7th edition ebook. A part of this kind of concepts here. For example, this one which I have shown you also. We got a hammer. Yes, it's not explained here. Here we have a hammer is the same like this candlestick. Yes, because it's for all candlestick. So what do? You wait that price goes down, and on the upward movement you got into a trade. Yes, and you see here that was here. You wait that price goes down to this level. Yes, and then on the uptrend, that's on the purchase time, it goes down, and in the expiration time, price will then go up. Yes, that is what you expect. If price instead goes up first, you don't enter into a call trade. Yes, that is clear, because at the end of the expiration time, because market moves in waves, it will go below your entry point, and then you get out of the money. Yes, in the last 30 seconds in the expiration time, when you cannot act anymore, and that makes you then really frustrated, because then you think that the market is against you, that the broker is manipulating or something like this. But no, it's mostly use that you don't know how market behaves. So okay, that was already. If you like this video, do a like. If you didn't subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.